This tutorial will explain the difference between a trust account and a trust amount client account. A trust account is actually an asset. It's basically money sitting in the bank in trust. Now, trust amount client account, however, is a liability account. Okay. In liability, you have trust amount clients, which basically is the double entry for the trust account that you have in bank. For example, say you received a retainer from Amy Williams for this matter. When you actually go to the matter and record it, what happens is it puts two entries. Let's just try this. I'm going to change this entry from $500 to say $600, and because I'm changing, I need to unlock it. When I apply the change, you'll see that it puts two entries. The first entry is in trust amount client, it puts $600 as credit. Now, you'll also notice that it put a subledger entry saying that Amy Williams is the one against whom that amount is actually credited. Now in bank, however, what it did is it put this exact same amount as debit. So if you'd actually click on the description, you would see the debit and the credit. So it says for Amy Williams, for this matter, for check number, it put in pool trust account debit, and exact same amount was credited in trust amount client. What this enables you is to generate a lot of ledgers and receipt journals as requested by Law Society. Like for example, if you want a client receipt journal, you can just click on that and choose Amy Williams, and you will have a client receipt journal. The format is exactly how it's said in the Law Society's bookkeeping guide. If you open up the bookkeeping guide and go to, I believe, page number 18, you would see the way the Law Society asks you to generate is pretty much exactly the way we generate. So to summarize, the two accounts that get credited and debited when you actually deposit a retainer are your bank account, which is the pool trust account where the money gets debited, and trust amount clients is the account where it actually gets credited.